Hey everyone, welcome back to the IT Investor Podcast, the show where tech professionals and busy earners learn how to build wealth through real estate and alternative investing.
Today, we've got a special guest joining us. He's not just a full-time ER physician, he's also a hands-on operator, capital raiser, and someone we both had the pleasure of working with recently on a deal.
Dr. Chirag Chaudari is based in Maryland, and we have seen him in action at Race Masters, in person here in Maryland, and most recently, during the Wandry deal, where he played a big role in the capital raise.
He's also someone who gets deep in the weeds, due diligence, EC compliance, K1 prep, investor communications, and management, you name it. Plus, he's involved in some fascinating alternative deals with oil and gas, an Arizona land deal, and mobile home parks.
Without waiting much further, let's dive into it. Chirag, welcome to the show.
Oh, thank you so much, both of you. I really appreciate it and great being here.
Yeah, we're excited to have you here. Let's start at the beginning. How did a full-time ER physician like you get pulled into the world of real estate?
Yeah, so honestly, it's something, my wife and I have been interested in probably shortly after starting as an attending. We started thinking about what retirement looked like and how we were going to be sort of thoughtful about that. We'd never been huge believers in the market and wanted to sort of have a diversified portfolio. And so real estate just made a lot of sense at the time. And so we started, relatively slow and just ended up getting some condos and townhomes and we're landlords for a period of years, and then slowly learned a little bit more about kind of broadening our horizons, if you will, and getting into syndication investments and being able to pool money with other investors and do things at a larger scale.
Oh, good. So Chirag, you have told a lot about it over here, meaning you bought condos, townhomes. So what I wanted to hear is, when did you actually start this, and what was like your first deal, and how did you end up into passive investing after that?
Yeah, so that's great. So I first started with syndications. Was really taking a course probably in 2021. We'd had a active portfolio, but started taking a lot of different real estate courses to really broaden my education and my learning. And so as a result of those courses, after every one, I sort of took massive action. And so if it was something on passive investing in real estate, I would do my due diligence. I would find a deal that I thought would do well and then invest. And so we did that serially for a period of time. And then through sort of learning and, getting into more of these investments, developed sort of a passion for these deals and found other physicians that did the same, and joined a physician mastermind that really got into a significant amount of detail with these deals and learned how to operate not only as a limited partner, but as a general partner in some of these deals and bring them to sort of our community and other fellow physicians and accredited investors.
One more question I have. So what made you believe that I can build long-term wealth through this?
Yeah, that's a great question. I think, part of that is sort of the ability to have real tangible assets that are going to go up in value over time. Real estate, is a buy and hold strategy for a lot of folks, and being able to do that and benefiting from not only sort of the tax benefits, but the appreciation that comes with property in general. And then being able to, either 1031 into larger properties or, hand them off to the next generation, and the children, and have them sort of benefit from that same passive income really spoke to us.
Yeah, I understand that side with having young children myself. I know Pramod as well. When did you first start raising capital? Like what inspired you to kind of focus on that side of the business?
Yeah, so I'd gotten involved with a few deals with an investor and had been a sort of an LP, a limited partner in those deals. And so knew the deals relatively well because I had researched them pretty thoroughly. And one of my real estate masterminds had the opportunity to raise capital for that same investment. And so we were offered the opportunity to then bring in capital, bring in friends, family, other investors, let them know about the deal. And so that was my first opportunity at, sort of offering out this opportunity to others. The only thing I'd really, capital raised for, if you will, was my daughter's sort of Girl Scout, cookies and things of that nature. And, you're not asking for significant amounts of cash from folks. And then you turn around and these investments, obviously, it can be a significant investment for folks, but tremendous opportunity. So that's when I started.
So diving a little bit more. So was there like a specific moment or a deal that made you realize capital raising was your path? Or is it like your friends and family were, asking you where to invest? What went through?
Yeah. So I think not a lot of folks knew that I was doing this and knew that I was into real estate. And, as physicians, it's not something that we normally talk about in the day-to-day sort of practice of
Right.
emergency medicine or, just being in the hospital and sort of, you have to come out of your real estate closet, which can be a little bit uncomfortable because it's, you start talking about a hobby and a passion that you have. And so, but I started slowly just, letting people know what I was up to and what I was doing. And some of them, had similar interests and also were very curious. And I think, sort of through that word of mouth, people start, to approach you and discuss different topics. And if they find you to be knowledgeable in a particular area, they'll come out and seek out that knowledge.
Totally agree on that.
Yeah, I think I use a similar strategy, at Pramod as well. I use social media a lot. A lot of my professional contacts are on LinkedIn or, friends and family on Instagram. And I'm really just sharing out information about you call it a hobby. It is kind of a hobby at some point, but it's something I'm really into. Creating those passive income flows. There is for me still, I'm a newer capital raiser where you open up these chances for a conversation with new investors, be it friends or family, or even somebody you met through the network, where it's gone past that initial conversation about, the business model. And it comes down to actually talking about what's the size of the check you can sign, kind of the thing. That causes me sometimes a little bit of anxiety. Did you ever had a point where that was something that was hard for you? How did you face that fear, that trouble? How did you overcome that?
Yes, I think initially, yes, you feel almost like you're asking for money.
Hmm.
When you first start doing this, and that's a little bit uncomfortable, it's unnerving. And I think at some point we make that transition where it's not about asking for money anymore. It's just offering opportunity. Right. And these deals are pretty tremendous. We do a significant amount, of vetting and due diligence. And while you can never be 100% confident in any of these deals, you go in knowing that you've done the hard work of sort of vetting the sponsor, vetting the deal, and having a pretty good idea that things are going to go well. And so now you're offering up this opportunity, which you stand by, you're investing in, you have skin in the game. And so it becomes less of a sort of an ask and more of a, hey, this is a really neat opportunity. And you talk about the basics of the deal and you figure out what people need. Every deal matches every person's need at that time. Some people have a need for cash flow. Others want to, rapidly multiply their equity. Others just want, a really safe investment. And so those can be very different for different people. And so you don't want to sort of figure out what people need, what they want. And then if you have something that fits that, great. If not, a lot of times in our community, we know others that may be raising for a similar product or have a similar offering that, we can point them to.
Yeah, so that's great. I mean, you offer them or you get to know your customer or your investor much before, right? What they're looking for, whether it is for tax benefit or whether they want the cash flow. But once after you identify that, the next phase is to educate them with the products, which could be like short-term rentals or multifamily or land or oil and gas for that matter of fact, right? So how do you, gain their trust and educate them? How long does it take? Or what is the secret to capital raising, in short?
Yeah, I wish there was a secret. No, I think everybody's probably does it a little bit, uniquely, and everyone has sort of their own process for doing that. But I think it's just like medicine is a relationship business, real estate is a relationship business. It's just getting to know folks. A lot of the folks you already know, and you have that sort of know, like, and trust relationship already built. And others maybe not necessarily, and they're folks you're meeting at conferences, at other locations. So, it's, I think knowing that the deal, sort of the opportunities and the potential really allows you to speak at a high level about these opportunities. And, I think people want to know and they want to seek out these opportunities from folks.
Mhm.
And it's just having those conversations over time. And that's not to say that, everyone that you have a conversation with is going to necessarily come into a deal or anything like that. But over time, having multiple conversations and seeing sort of your track record, your successes, they begin to trust you and know
Mhm.
that, you have their back.
And is it all those conversations like lifting your phone or meeting them at a conference or at work? Or it
Yeah.
could be a combination of all these?
Yeah, I think it depends. I think people have different sort of ways they like to communicate. Some people love getting an email and don't want to talk, and they just want to sort of read through, material that you may have. Others are like, I'm never going to read your email. Send me a text message because I'm not going to look at it. So knowing sort of what their love language is, if you will, for communication. Some people want to meet in person and have that conversation face to face. So I think it's person dependent, and you get to, as you communicate with them, you get to know sort of what works best.
Well, should we take a closer look at a recent deal that yourself and Pramod have worked on together?
Yeah,
I've heard
sure.
some
Happy to.
conversation around the Wandery project. You guys are part of a raise together. Can you maybe walk us through your role on that project?
Yeah, absolutely. Yeah, Wandery's it's a great sort of elite short-term rental deal that is a fund of different short-term rental properties based in Arizona and California. That is the second fund that the sponsor is doing, and it's been pretty terrific so far. And I'm really sorry, guys. I'm getting calls from the hospital. We may have to pause for a second if that's okay.
Sure.
Yeah,
We
go
can
ahead
do
and pause.
Is it okay if we just
that question?
Okay, let's see. You were part of a raise for Wandery alongside Pramod. Can you walk through your role and tell us a little bit about that project?
Yeah, absolutely. So that was a great project for Elite Short-Term Rental Fund. It's actually their second fund. They've had one that's been running and outpacing their pro forma, and so they figured they would do a second fund, which is a 25 million fund total. And they are raised over 20 million already. And so Pramod and I have been raising for that for the last several months now. And they have properties in Sedona, Arizona, also in Indio, California, and Palm Springs. They have hotels, as they don't allow short-term rentals there. And so they use the hotels since it's more of a business and a hospitality license. So they're able to use the entire hotel as a short-term rental. And so it's been going great. They buy these really nice assets, and then we'll put significant amounts of construction into them, several $1 million per property. Some of them have lazy rivers in the backyard and pickleball courts and basketball courts. And they're really amazing estate homes. And so that's vertically managed. And so we're both capital raisers for that and bringing sort of our investors, our community into that opportunity, which is structured to be a 5-year hold and ideally a little bit over a 2x equity multiple. But the nice thing is it's one of the highest cash flow opportunities that we've done because it's 8% annually in terms of cash flow. So it's 2% per quarter that folks will get. And we've negotiated sort of better terms for our investors. They come in with an 11% pref. And so no splits with the partners or GPs until they realize that fully. And then we have a preferential split. Instead of a 70-30, our investors are getting a 72-28 split. And so up to 15% IRRs. The goal, the expectation is somewhere in the high teens, low 20s for a deal level IRR that'll come back to the investors.
Yeah, that's great. And I know Chirag has been working diligently on this race. I had been in this deal, let's say like since the last 1 month, but I know for sure Chirag has been working much before that. So can you walk us through what you had to do, you and Nicole especially, right? I mean, before you bring this deal to the table, I know you have like a group of all doctors who go as united and raise this fund. But before that, do a lot of work. Can you go through that, Chirag, what you actually do?
Yeah, absolutely. Yeah. So we will, sort of assemble our team of folks who are interested in potentially capital raising for a deal. And then we begin that due diligence process. So yeah, to your point, Pramod, we actually started this around Thanksgiving of 2024. So it's been a long time. So yeah, we take a significant amount of time really digging into the deal itself. We look at all of their numbers, but don't trust, right? Trust but verify. And so we get all of our own numbers. We actually have an economist on our team that looks at every single property and, profit loss for each property, occupancy, all of those kind of things, just so that we're comfortable knowing that each property sort of independently is still functioning well, as it is a fund and sort of not all of the assets had yet been purchased. And so looking at the strategy sort of what type of assets they're looking at, how are they going to function? We do criminal background checks of anyone that we work with. So the sponsors, we wouldn't do that maybe as individuals coming into a deal, but when we're bringing in several $1 million of, family and friends money, we take that very seriously. And so we then meet with our SEC attorneys and make sure the funds are structured appropriately. We have CPAs, and so that we're able to sort of predict somewhat what that depreciation pass-through is going to look like for investors. and want to be able to answer all of the investor questions that they're going to have when they come into an investment like this.
Wow, that's great. That's a lot of due diligence work, which is going through every deal. And I was impressed. I should say that, Wally.
That's good. I was going to say, it's very admirable to see how much work was put into that back end team, whether it's the legal, the tax, the folks doing the due diligence.
And the economist, right?
Yeah, absolutely.
Yeah. It unfortunately sometimes catches some of the folks that we work with, our partners, a little bit off guard, because I don't think most people come in with sort of the level of scrutiny and the
Sure.
level of detail that we want to, we want to be able to see the books. We want to be able to really get in there, and we're happy to sign NDAs and whatever else, but we need sort of to be able to see under the hood, and know that the operations are significantly strong enough to support our investor base, because the last thing we want to do is lose a single dollar of investor money. We take that very, very seriously. And so, we try not to be offensive to our partners, but at the same token, we do need answers, and we do need a very detailed level economic kind of review of the deal.
Yeah. And Chirag, I think you have like a team of these doctors who are spread out all across America, East Coast, West Coast. And is it true to say like you guys also do the walkthrough of these properties?
Yeah. So I would say many of the properties that we're able to, we will have one of the team members try and go. We invite our investors to actually come. We just had an investor go to a few of the properties just last week. And so we try to, be transparent, be open with that, visit the sponsors and the partners that we're going to be working with, and take trips. I know, Pramod, we were out there in Phoenix,
Yes.
and we got
Orlando.
a party bus, if you will, and
Yes. A
we saw,
sprinter.
yeah, and we saw
Yeah, I
several
know.
of the
I
sites.
wish I had come, but my travel was on Sunday, and I know you guys were going on a Monday.
Yeah,
Yeah, I couldn't make it.
yeah, but being able to sort of connect with folks when you're in these places, yeah, it really does make a difference.
Yeah, that was a good segue really actually into our next topic was building trust with the investors. How'd you have the questions on this one?
Oh, okay. So, coming from a medical background, how do you build trust with investors who may not see you as a typical full-time operator?
Yeah, I think that's really good, especially when you're starting, because you don't have a
Yeah,
track record. You haven't
that's true.
done anything yet. And so you can't sort of show a portfolio of all of your activities. At that point, it really is folks that know you know well, and that are going to be sort of, people who know you as a person and know that you're going to have their best interest. And then I think conversations with others as you start learning more and doing more of the deals and being able to speak very comfortably sort of the language of capital raising and these private equity deals that we're getting into, people have sort of develop a trust. But until you're able to return some of that investor money and have some deals go full cycle, which we know in this industry can be, anywhere from 3 to 5 years, typically at a minimum, that's difficult. It's not easy. And so it really is just conversations, letting people know that you look at sort of downside protection and, risk mitigation is really important, and that you're fully aware of all of the consequences that could happen, and that the steps that your partners are going to take to avoid those things from happening.
Yeah, that communication is huge. What are some of the systems that you would use to get that messaging out, the communication out, whether it's the investor portal or distributions, things of that nature?
Yeah. So depending on the deal and how frequently they're distributing cash, those are typically quarterly updates at a minimum to be able to let investors know what's going on. Obviously, if there's anything significant or decision that needs to be made, there's going to be communication that becomes a little bit more frequent. But yeah, that's typically done through our portal, depending on how many, sort of capital raisers we have on a particular deal and folks that are in different roles. Sometimes we message through our own CRMs and send messages that way. But yeah, the communication, is no less frequent than quarterly.
So, Chirag, we all know like investors love clarity, right? So, how do you make things like K1s, PPMs, the subscription docs? Those are all could be very overwhelming for a newer investor, right? So, how do you make that simple for them?
Yeah, that's great. I wish there was a way to make it really simple. I think it's just being sort of, white glove as much as you can and let them know sort of what to expect. Here are the next several steps in your investment journey, right? You're going to be getting these legal docs. You're going to go and sign up on this portfolio. Take your time, read through the documents, You have my cell phone number. Let us know if there's any questions. We'll walk you through all of that. If there's anything you don't understand, don't sign. You want to be able to understand exactly what you're doing, and we're happy to walk folks through that. And so we try to be mindful, especially for investors who've never done this before, and it may be their first, sort of syndication investment. That is nerve-wracking for them, and we try to be very thoughtful and take them through the process as much as we can, our hands the whole way.
So I think right now is probably a good time to, we've talked about the Wandery project, which is more short-term rentals. Up until this point on our podcast, Pramod and I have been focused on multifamily, but it seems like you've had a lot of experience in diversifying outside of just those two real estate asset classes, whether it's the oil and gas space that you've had some experience in. It sounds like you're doing some land deals now. Let's talk about diversification of the portfolio and some of the unique spaces that you've had a chance to invest in.
Yeah, absolutely. So I think, when my wife and I first started, we wanted to get into every different asset class there was. And so the thought behind that was, not many of them are correlated to one another. And if one particular asset goes down, the other ones are going to stand alone and still do fine. And so, we're in ground up construction, we're in land, we're in mobile home parks, we're in storage units, we're in, oil and gas deals. And this is just personally because we wanted to have that diversification. And in talking to folks, it's somewhat clear that they want the same. A lot of them do. And some of them, some of their bread and butter, and they're going to do multifamily, and that's all they're going to do, and that's fine. Some of them are very geographically concentrated, and that can be a risk for environmental reasons and other reasons. And so to be able to sort of have assets and investments in different parts of the country and different asset classes, to me, is really important. And so I wanted to be able to offer that to investors and certain investors, and depending on what their why is and what they're looking for. Some of them, it's cash flow and it's a replacement of their clinical income. Others, they just want to have, sort of a comfortable nest egg for retirement when they're ready to do that. And so different investments appeal to different investors. And so we like to have sort of a wide spread and a wide berth of different investments to offer. It also gives us the opportunity to learn and grow, because through our due diligence, we learn about these different asset classes at a very deep level. And anybody that works with us gets the benefit of that knowledge as well. And so for us, it sort of helps us learn, grow, and be able to offer those opportunities to others as well.
So, as Wally was mentioning, mostly we do cover multifamily in this podcast show. So, if you don't mind, can you elaborate a little bit more into the oil and gas, which can be intimidating for new investors? So, what's the opportunity here, and how do you structure these deals with oil and gas?
Yeah, so oil and gas is an interesting concept because, the federal government will subsidize oil, gas, mineral, and energies investments where it can offset your active income, right? All these multifamily investments and syndications and other typical private placements offer K1s that'll offset your passive losses, but it's difficult to sort of offset active losses, so off your W-2 or 1099. And so oil and gas investments have IDCs, or intangible drilling costs. And if you're invested in the IDCs, those are able to offset active income. And so there are many different oil and gas investments out there. So the ones we're looking for, especially with, many of our investors who are physicians, do want to be able to offset some of that high income and some of that tax. And they may not have real estate portfolios where the passive losses are not super beneficial, and they really want those active losses. And so in any given year, typically, depending on the investment, you can offset 70 to 90% of your initial investment off your W-2. So if if the investment, say, is 100K, that could be 70 to 90K that comes right off your W-2 that year that you're not going to be paying taxes on.
Wow, this is
Which
great.
Yeah, it's great. And it's a quick sort of initial return on investment, even though that doesn't sort of factor into the overall returns of the deal. Many of them will sort of hold these deals in perpetuity. And so your return of capital can be as short as 3 to 4 years. And then after that, it's sort of infinite returns, because you'll still continue to get, monthly cash based on oil production and energy production from those wells.
That's a very interesting asset class I haven't had a chance to tap into yet. It does seem that most of those are for the accredited investor. At least I have not come across one yet for folks like myself who aren't at that status just yet. But that's a fantastic, the ability to offset your active income. That's really cool.
Yeah, and I think, Wally, to that point, I think one of the things we want to do is to be able to sort of offer opportunities to folks who are financially wise. And to your point, maybe they're not accredited yet. Like we see that a lot of times with our new physicians who are just out of residency. Their salaries aren't there. They're not going to meet the definition of accredited investor, but they've been thoughtful and wise about their investing journey, and they have enough to be able to come into a deal like this. They just don't meet that definition. And so what we're going to structure our oil and gas investment is as a 5XP, and it'll stay that way for the first month. And so we can bring in friends and family, and we can bring in unaccredited investors, a small number of them. And then a month later, it changes into a 6C where we will only accept accredited investors. But that way, to your point, we're able to sort of offer that opportunity to folks that may not have that opportunity, a lot of the time.
That sounds like an awesome opportunity for those watching right now. Chirag might be your guy if you build that substantive relationship. Yeah, that's good to hear. I didn't know that was something that could be offered to folks outside of that accredited investor status. So that's very interesting.
So this can be done before you market the deal outside, right?
Yeah. So you're allowed in a 5XP to talk to friends and family and those folks that you know,
but
and
not on
SEC
social media.
Correct. No, you cannot broadcast unless they're your friends on social media. You can't publicly broadcast. You could send a message to a friend on social media, for example, that you already have a pre-existing relationship with, but you can't advertise the deal. That's not appropriate.
Deal.
Yeah. So it has to be just friends and family that you know and you have that pre-existing relationship with already.
It's interesting. I want to pivot over to mobile home parks. Interesting asset class. It seems to be kind of becoming more and more popular over the last. Well, a lot of times, new investors, they get caught up in the mindset of that's not a place that I would personally live, or not that you would judge a mobile home park, but it's not a flashy asset class, especially compared to like the Sedona state homes that you guys are renting at short-term rentals. But there's a very loyal following right now in this asset class, and they cash flow really well. Can you tell us about your personal experience there with that asset class? What it's like to invest in a mobile home park? What it's like to raise capital? Any challenges there specifically?
Yeah, so I think it's a great opportunity, and I will say I'm not capital raised for a mobile home park, although we've spoken to a few mobile home park operators and sponsors that eventually will be working with one of them. But we're always having these conversations, and those relationships, as with any other relationship, takes months to years to develop to where you're able to sort of thoughtfully capital raise for one. My wife and I are in a mobile home park deal as limited partners, and we get regular updates. But what's nice about that, it's a recession-proof, if you will, type of investment, and there's always a need for that. And there's some really great mobile home park sponsors and operators that we know that are very socially responsible. A lot of mobile home parks will sort of just rent the home, if you will, to the owner. And so there's a lot lease and then there's a home lease, and they're collecting sort of both of that. And yes, there can be significant cash flow for the investor, but some of the mobile home parks that we align with and want to work with want those folks that live in the parks to become owners themselves. And they can do that very easily. They have essentially no interest financing for a lot of these properties where, these folks now become homeowners. And it's a great way for us to be socially responsible while still bringing investors into a tremendous opportunity. And so that's sort of who we're looking to partner with is folks who are socially conscious and want to better, their fellow human.
So if I understand correct, you are looking for homeowners, but you would be collecting the lot rent.
Yeah.
Got you. So when presenting these alternatives, what is the most common concern you hear from investors, and how do you handle that, Chirag?
Yeah, I think some are nervous about just going into an investment that, they haven't had to sign legal documents for, right? In the market, you just say you're going to buy, some shares of stock and you go and do that. So I think this is a little bit unnerving for folks that they're signing a bunch of legal documents and that, the SEC is sort of watching these investments. And so I think, some of them are fearful that they could lose their capital. And they're right to be, because if they're not thoughtful, if they're not sort of considering, the different investments that are out there, and they jump into something without doing some due diligence, there's a lot of these deals that don't do well and that are maybe operated by sponsors that are not fully aligned with their investors. And so that is a good fear to have. I think when you come in through folks like us that are doing the work and doing the due diligence like you guys do on your deals and know that you're getting into solid deals, that makes them much more comfortable. And I think, when you let them know exactly what you've done and how much you've done, they become much more comfortable. But you're right, there is some fear there.
Let's pivot for a second over to the time management and vision. Even just during this recording, you've had the hospital calling you, texting you, trying to get you to come in. So you're still working ER shifts. How do you manage all of your responsibilities of your, I won't even call it a 9 to 5, just your career, and then on top of that, the work you do in real estate?
Yeah, it's funny you say that because it is a passion, and clearly we're pretty passionate about what we're doing here. You guys are running a fantastic podcast, and folks that are probably listening to this are obviously very interested too. But when I was the chairman of my department for many years, and that is a very time consuming position. And importantly, your focus sort of has to be on that all the time. I've stepped back from that and have a little bit of a different sort of position in the hospital. And so it's not evenings and nights and weekends like, sort of being a chairman of a department is. And so there is some flexibility there. But I unfortunately picked up a mistress, a couple of years ago, and it became really difficult. My wife was not happy. The mistress in this case was real estate, right? It wasn't another woman. I'm not into that, but I began to spend a significant amount of time in real estate, when I wasn't doing hospital work in the evenings and on the weekends. And so I have a curfew now. She has an imposed curfew, and I'm allowed certain hours of the day where I'm obviously I'm doing my hospital work, but then there's only limited hours that I get for real estate. And trying to do it sort of painting within the lines is tough, especially when folks are in different area codes, and you're talking to West Coast folks, but you make do, and it's what's important, and you can still get a tremendous amount of things done in the time that we have. So I think I'm looking over Pramod's shoulder, and I'm seeing the Buy Back Your Time a book behind him. And I think
Yes.
I think those are the strategies, like who, not how, and using VAs and figuring out different ways that you can really amplify your time and use sort of that precious commodity that we have in the best way that we can.
Yeah, I completely agree with that strategy, Chirag. It's also good to have like a balance, right? I know you're very passionate, but it's always good to have a balance. Yeah.
No, absolutely. I think that's if you don't, right, bad things happen. And so you want to be very mindful of that, and definitely have a work life, hobby, whatever it is, balance your passions with home life and everything else.
Yeah. So having said that, what's on horizon for you now? Any new upcoming projects or areas that you are excited to dive deeper into?
Yeah, I'd say, we probably have 2 to 3 calls a week minimum with folks that we potentially may be working with in the future, are trying to vet and sort of meet more formally and understand them better. And so there's a number of multifamily operators that we're considering working with and looking forward to working with when there's a deal. We also want to be mindful that when we do work with a partner and we tell them, for example, our oil and gas deal, we've committed 10 to 15 million to them. And so, when we do that, we're very mindful not to bite off more than we can chew. I mean, we want to deliver. The worst thing we could do is tell somebody that we're going to be able to come in with a certain amount of money and not get there. That would be terrible. And reputation is a big deal in our industry. And so we want to have a reputation of being a good partner and delivering on what we say we will. And so, oil and gas is a big one coming up for us, but then we're really bullish on Phoenix. And so, we've done a lot of land opportunity in Arizona, and the next deal, multifamily, that we want to be doing will be in Phoenix. The question is when. But we have a couple of sponsors that we're working with, in that space. And so we're looking forward to that.
Awesome. Chirag, you've dropped some serious knowledge on us today, from the deal structure to communication to how to diversify a portfolio. We really do appreciate your time.
Yeah. And for anybody who is listening, who wants to co-invest with you, Chirag, or learn more about you or what you are doing, how can people reach you?
Yeah. Well, first, Wally and Pramod, thank you for, doing what you're doing. I think podcasts are a great way to get to sort of a lot of folks and pass on your wisdom and knowledge and bringing on other folks that, have things to offer. So kudos to you guys for taking this on and launching your podcast. I think it's great. But I'm at thesyndicationdoctor.com. And so I have a newsletter that people can sign up for. We'll typically have our deals that are currently open on there as well.
Cool. And we'll be sure to drop your contact info on our show notes so that the viewers and listeners can find you too. And for everybody that tuned in, if this episode hit home for you, send it to a friend in tech, medicine, anyone sitting on the sidelines. Let's get more professionals owning their wealth journey.
Thanks everybody for tuning in today. And remember, this isn't about deals. It's about designing the life you want through smart investing. See you next time. Thank you.